Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. This week I've had a lot of cash open up in my investing account, mainly because I had a bunch of options trades that were in the works, and this past week they've all been closed at this point. So I have a lot of cash freed up, and so I've been spending most of this week looking for places where I wanted to put my money into the future. And in the past couple weeks, I've been making videos talking about undervalued stocks to buy. And in the comments of some of those videos, there were some people pointing out that I should prove it, that these are stocks to buy, and saying that I should put my money where my mouth was. And so from this comment that I got right here saying that I should follow my own financial advice, first I wanted to point out that this is not financial advice. I am not a financial advisor. This is just my opinions. So that was the thing that kind of stood out to me originally. The next thing was, there are so many stocks out there, and the whole point of this channel is to go over some of them that I think could be decent values in the future. I don't have a lot of cash. I am a college student right now. We're in the middle of a pandemic. I don't have $1 million where I can buy, 10 shares of all 2,800 stocks on the stock market. So I have to pick and choose. But in this video, I wanted to talk about why I decided to kind of pull the trigger and end up buying Delta stock. In the past couple weeks, I've been talking a lot about airline stocks because they've been some of the most beaten down sectors in all of the stock market. And so in the past couple weeks, I didn't have a lot of cash on hand. And now that I do, I've decided that I wanted to buy a bunch of Delta stock. And in this video, I'm mainly going to be talking about the three main reasons why I decided to pull the trigger and buy 100 shares of Delta stock. So obviously this trade has a lot of risk associated with it. This isn't something where, I put my money into it and there's a 100% chance that I'm going to make money. This is one of those positions where I'm like 95% sure that for a long-term investment, Delta is going to pan out. But, there's a lot of other factors that could go into that. So it's not the safest play in the world, like if I bought 100 shares of Microsoft or Apple, but based off of the discount that I'm getting, I felt confident enough to put my money where my mouth was. I made a post talking about the Boeing CEO coming out and saying that he expects at least one of the major US airlines to go under in the next year. And so I kind of posed the question, who do you think it's going to be? I asked, is it going to be American? Because, I've been very outspoken on this channel about how much I hate American. Is it going to be someone else, or do you think that the federal government is going to bail them all out? And based off of the results of that, it seems like everyone kind of agrees that it's either going to be American or they're all going to get bailed out. That was me kind of gauging how my viewers kind of view the airline industry. And so I'm happy to see that most of you guys also hate American Airlines with me. So at this point, I agree. It does seem like the federal government is going to bail out airlines at all costs. We've seen that with Trump coming out and saying that, they've been bailed out already and they're doing very well, which, the airline industry is definitely not doing well. But based off of the comments that he's made in the past couple weeks, it leads me to believe that no matter what, the airline industry is going to be fine. Some of the news that we've seen this past week is we had an economist come out and say that the demand for airlines is going to be going down for a while. And, that kind of spooked the market. I don't necessarily believe that, but that's what people are saying. There's also some news that Delta is retiring all of their 777, the Boeing planes, and going towards Airbus. And so it looked bad at first, and then I kind of did some more research into it, and it was because these are planes from the early 90s, and they're trying to reduce costs. So I didn't see that as a horrible thing. The market kind of viewed it as negative, but I don't really see it that way. The big news from this week for the airlines is that there were some more rules and restrictions that came out for these airlines. Some of the positives is that they can cancel any flights or routes that they really want to give them more flexibility. The bad thing is that they were told that they have to give refunds to all their customers where their flights have been canceled in the future. So, there's some positives, there's some negatives. It kind of pushed the market down overall for the airline stocks, but I still think it's sitting at a pretty good spot. So at this point, I want to say that I have not actually bought Delta stock. I have sold a put, meaning that I'm on the hook to buy 100 shares of Delta stock at $19 by next Friday. So I haven't officially done it yet, but I've put my money where my mouth was. And if it does go below $19, I will be the proud owner of 100 shares of Delta stock. At this point, it's sitting around $19.15, so it's likely that it's going to actually get executed. But one of the main things for people that aren't as used to trading options is the fact that I pocketed 74 cents of premium, meaning that if I do get assigned these shares of Delta, my average cost basis is going to be around $18.20. And so right now that is almost a full dollar below the current share price. So as long as it stays above $18.20, I'm going to be positive on this beginning part of the trade. One of the main reasons why I decided to sell a put instead of just buying 100 shares straight up is the fact that the IV, which is one of the main ways that the premium is determined, is very high right now based off of the news stories that have been coming out and how volatile the overall airline industry has been. So I took advantage of that. So now I'm getting 74 cents discount and then buying it at $19 if it gets that low. And so I'm expecting by the end, if I can actually get these shares, by the end of the summer, I can get my cost basis down below $10. And so I'm happy to buy Delta at $19. And if I can get my cost basis lower by using my favorite option strategy called the wheel, that's even better for me. So at this point, I am currently making an online course where I'm going to be breaking down all you need to know about options, and so expect to see that released in the next couple weeks, and I will have a pre-release discount for if people want to sign up for like a 50 to 75% discount, so just keep your eyes out for that one. All right, now let's get into it. The three main reasons why I bought Delta stock, and the first one is because it seems like all of the news stories are priced in at this point. And so this has kind of become a running joke on places like Wall Street Bets, where you have record unemployment, but the stock market keeps going up because all of this negativity has been priced into the market already. And when you look at the overall chart, when I put up the 6-month chart, you can see the fact that most of the damage for Delta's share price was done in the middle of March. From that point, we've had a little bit of moves up that was mainly from the bailout, and then we've had some negative stories that have pushed it down. And it's sitting pretty close to where it was at the middle of March. And so it seems like there can't be any other news stories that really come out that are going to push it significantly lower. I can realistically see it going down to maybe $16 or $17 in the future, but at this point, what are they going to come out with that's going to push airlines further? We've seen news stories that the demand for bookings are down 98 to 99%. How much lower can it really go? That is kind of a simplified view of what's going on right now. I'm sure there could be some massive story that comes out that pushes it lower, but at this point, based off of the fact that we're seeing things start opening up relatively soon, I'm not expecting to see any catastrophic news stories that are going to push things down. At this point, I think it's more likely that we're going to see a news story that looks really good and it's going to bump the share price up significantly than us getting some catastrophic news story that's going to push it down. The share price is down 67% year to date, and I really just don't know how much further it can go down based off of what we're currently seeing. And so reason number one why I decided to buy Delta stock is the fact that it seems like all of the news stories are priced in at this point. We've had around 2.5 months where all of the damage has really been done already. And at this point, the moves that Delta has been seeing, like right now it's down 0.5%. And so these aren't the significant moves that we've seen in the past. When I put up that chart one more time, you can just see how quickly it fell off a cliff. And that volatility, we have not seen that since then. So at this point, it probably can go lower, but I'm betting on the fact that most of the major news events have been priced in already. All right, the second reason why I decided to buy Delta stock is from the fundamentals. And this is probably the strongest reason why I'm bullish on Delta overall. In the past couple of videos, I've been talking a lot about these fundamentals, but so far in this video, I've been mainly talking generally about the overall airline sector. And so now I want to specifically talk about Delta and why I'm picking them out of all of the airline stocks out there. So I've talked about this in the past, but when we put up the revenue chart, the main thing that kind of sticks out to me is the fact that they increased their revenue during the last recession. And now I've been talking, at this point, it's like 99.9% sure that we're going to be seeing a recession just based off of the textbook definition. But based off of their history in the past recession doing well, that gives me a lot of confidence going into this time of uncertainty, because we're going to be seeing a recession, there's going to be some problems, but they've shown in the past that they can increase their revenue during that time. So that gives me a lot of confidence going forward. Another way that I like to compare companies that are in the same industry, I talked about this a lot in my competition video, and the way that I like doing that is looking at the PE ratio. And so looking at the PE ratio kind of on its own doesn't really tell you a lot. You can see how the PE ratio has changed over time, the price over earnings, but when you're looking at companies in the same sector, they're all making the same amount of money. When you look at the tech industry, the PE ratios are sky high. And then when you compare that to a normal retailer or the airline stocks, it's kind of impossible to compare the two because you're comparing two completely different businesses. But when you're comparing companies in the same sector, it can tell you a lot to see if a company is considered undervalued. And so the lower the PE ratio, the more undervalued you can consider the company. And so when you look at Delta, their current PE ratio is at around 3.3. And when you look just before the virus, it was at 8, and it peaked at around 11. And so that can tell you a little bit on the discount that we're getting, but you can look at that based off of the price history year to date. But when you look at the rest of the sector, you can take a look and kind of compare them that way. And so Delta's is 3.3, United is 5.5, Southwest is sitting around 7, and then American, my favorite in the industry, is sitting at 0. And that does not mean that it's completely undervalued. It means that their earnings ratio is negative, meaning that you cannot get a PE ratio that you can really use. So if we're looking at the airline industry that way, it shows that Delta is the most undervalued. Next up, I want to talk about net margin. I'm just going to quickly go over this. It basically is a measure of how efficient a company is in turning revenue into net income. So the higher the margin, the better percentage of the revenue will be actually turned into income. And so when we look at the overall sector, Delta has the overall highest, meaning that they're going to be the most efficient when things get back to normal. Next up, when you look at debt to equity ratio, there's kind of a way that I determine how safe a company is for the long term. The higher the long-term debt to equity ratio, it can mean one, that they have way too much debt and it's getting out of hand, or it can mean that the shareholder equity is going down, and that's also a bad sign. And so when you look at the sector, there's a wide variety of debt to equity ratios on there. So before the pandemic, Delta was at 0.9 and now it's currently sitting around 1.25. Then you look at United, they're currently sitting at 2, and then Southwest, which has very little debt, which is kind of the main reason why they're my second favorite airline, is currently sitting around 0.38. And then you look at American, and their debt to equity ratio is 135. And so I wanted to point out the difference between Delta and Southwest. When you look at it, Southwest has significantly less long-term debt, but when you look at the type of businesses they're running, Southwest is very focused on domestic travel. Sure, they have some international stuff, but it's only in North America. And kind of the main reason why they've been able to do this budget type of airline is the fact that they use all of the same planes, the 737s. So they only have to train their pilots, their mechanics, their flight attendants for one plane. And so that saves a lot on cost. And then you look at Delta, and they are considered the largest airline in the world. And at this point, it's kind of a back and forth between American and Delta. But when you see that Delta is operating on such a larger scale, it makes a lot of sense why their debt is a lot higher than a company like Southwest that is very focused in what they do. And that's why their margins aren't as high, but it means that they can be a budget airline. So overall, that's reason number 2 why I decided I wanted to buy Delta stock, is all of their fundamentals, besides their long-term debt to equity ratio, is the best in the business. And then I just kind of explained why I'm not that worried based off the fact that Southwest has a better debt to equity ratio. So when you compare Delta to the rest of the industry, that was kind of the main reason that pushed me towards Delta as being the company that I wanted to buy from the airline sector. And so the third reason that I wanted to discuss for why I decided to buy Delta stock is the fact that you're getting incredible discounts. When you start looking around the stock market at this point, it's kind of getting more difficult to find companies at a significant discount. And so the travel industry has been the one that I've identified from the very beginning as ones that could be good deals in the future. When the pandemic first started, I was looking at cruise ships because they got hit very early. But now the more that I look at it, the worse they look, because at this point they have gotten no amount of support from the federal government. And so when you look at the discounts, you're just getting a similar discount for the airline industry and the cruise ships, but you have the overall backing of the federal government for the airlines. And so when you look at the charts for the airline stocks, most of the damage was done in March. And since then, it's recovered a little bit based off of the stimulus bill that went through, and now they're back and they're retesting those March lows. And so at this point, you're getting Delta at a 67% discount. And so I don't think that they're going to be going bankrupt anytime soon. And so if I'm comfortable holding it for a long-term position, almost a 70% discount is kind of hard to pass up on a company that I think has fantastic fundamentals and is probably the best company in that sector. When I put up the 5-year chart for Delta, you can see how stable it had been until this point, and then it was just a falling off a cliff for Delta. And so now they're starting to stabilize around the $19 to $20 range. And so that sort of stability, in addition to the 70% discount, was kind of too hard for me to pass up. And so looking forward, now assuming that I do get assigned these 100 shares of Delta at $19, my cost basis will be around $18.20, and I'm going to continue to sell covered calls against my position. And my goal is to get my cost basis down to around $10. So even if the worst case scenario that I've identified where the company gets hit by some horrible news, maybe airline travel isn't going to be back to normal until 2021. You know what, if that happens, I don't see it going down lower than like $15. And so if I can continue to take advantage of this high IV right now, which gives me high options prices, I can continue to lower my cost basis by selling options against my position. And so that's going to be my goal through the summer. And I'm very curious to see how it goes. This is probably the most ambitious options trade I've had in my entire investing career. And so I'm really excited for that. As I mentioned, this is a position that has a lot of risk. Airlines are not in a great spot right now. It's kind of hard to argue otherwise. But I think my idea of getting a company that I enjoy at a significant discount, almost 70%, and then picking the most stable and best set up to take advantage of any bounce that we see in the future was the main reason that kind of pushed me towards taking a position in Delta. So overall, I had 3 main reasons for taking a position in Delta. The first one is the fact that I don't know how much lower these stocks can go. At this point, it seems like most things are priced in. Next up, the fundamentals, when you compare it to the overall industry, everything except for debt to equity ratio is best in that industry. And even then, I explained why Southwest has significantly lower debt than a company like Delta. And then the third reason is I'm getting a company that I enjoy at a 67% discount. And at this point, it's getting more difficult to find companies at a discount. The stock market continues to go up. This has kind of been the first week that we've seen the stocks kind of fall a little bit. But when you look and compare it to the March 23rd lows, the stock market has jumped significantly since then. And the fact that I can get Delta at a massive discount was very attractive to me. So this is a very risky position, and I know that. And I'm very curious to see what you guys have to say about Delta stock in particular, and then the overall airline industry in the comment section down below. Thanks for watching. I appreciate all the support, and I'll see you in the next video.